What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is December 22nd of 2018. Well, folks, I hope you all are having a wonderful day and a wonderful weekend this holiday season. Today, we've got a lot of important things to talk about across the board in regards to both crypto and traditional markets. For crypto, I not only want to spend some time to talk about a little bit of the fear or FUD going around in regards to a potential delay or postponing of the launch of Backed, the physically settled Bitcoin futures contract company, but along with that, I want to spend some time to talk about some worries in regards to a new feature upgrade in Bitfinex's margin trading, and also some headlines for some of the projects that have sponsored the DataDash channel. But outside of that as well, we have some important things to talk about in traditional markets. I want to spend some time to talk about the recent government shutdown in the United States, making sense of it all, but along with that as well, going on to talk about equity markets more specifically, and talk about the continued sell-off we've been seeing across the board. The traders right now, I would assume, are probably happy it is the weekend. They do not have to worry about more sell-side action because the markets are closed. But I can definitely guarantee that many are worried about Monday because, as they commonly say, a sell-off does not end on Friday. So we've got lots of things to discuss. Let's not push it off any longer and dive right into the update. Alrighty, so let's go ahead and take a look over cryptocurrency evaluations here. As you guys have probably seen over the past few hours, once we hit around the $4,000 range, we started to hit a little bit of resistance, not only for Bitcoin, but for altcoins. So most cryptocurrencies are down over the past few hours with a few in the green, but obviously as Bitcoin is going to go down, it's not rocket science, most will follow. Again, nothing to panic about. We've seen a great run up in most altcoins as well as Bitcoin over the past few days. Really surprised by what we've seen in Bitcoin Cash, and going down as well with some of the larger ones like Tron, Bitcoin SV, Dash. A lot of these, altcoins in the higher market cap range doing actually quite nice. So very excited to see stuff like that rather than it just being some of the lower range altcoins on the 80 to 90 or 100 rank mark in regards to the top 100. This is good to see. But then again, you get some coins like this that I've never heard of before. Things like that sporadically come up either through market maker volume or little to no volume like Dentacoin. It seems like people got a good kick out of my Dentacoin joke. I think that's been a long trailing joke in the crypto space. But anyways, going on here, guys, to focus on the market cap here, we can see over the past 30 days, market cap is still holding up again, even with this correction here, still up about 27%. It's a pretty easy benchmark to go off of because we were holding around $100 billion here on market cap. So it's good to see that. Again, volatility still remaining relatively low, but definitely kicked up a little bit from the recent run up we've seen. And again, it's been good to see this in the market, especially the continued depletion of Bitcoin dominance. What I'm actually watching for here is a break on 50%. If you get a break on 50% on market dominance, that is going to get me a little bit interested because that tends to be the same thing that happens, not so much at 50% specifically, but that same trend of breaking the previous low on Bitcoin dominance in this case usually tends to signal that altcoins are ready for some risk taking, that people are picking up altcoins. Now, we're still a decent ways away from that, a few percentage points away, but it's something to keep an eye on. It doesn't mean that we're going to have a full swing altcoin cycle. It might mean that maybe we'll have a short-term period of speculation. Again, as we talked about the potential rebound going towards the 50-day moving average and maybe even a little bit higher as we've looked at the previous trends before. I'll kind of reiterate my point here as we go into the TA side of Bitcoin. That historically in 2014, we have retracements back up after dramatic sell-offs, as we've already had one recently in 2018, that lead back to the 50-day and sometimes even to the 100-day. So could we get something like that? And then with that, a growth in altcoin dominance? I think we could very well see it, but I don't know if I'd call it an altcoin cycle in that case. So going on here, as we mentioned, there has been a little bit of a correction here for Bitcoin in regards to its price, going from hitting resistance around, depending on what exchange you're looking at. I like to look at Coinbase. You could look at Bitfinex, which had around 4,200 and higher dollar ranges because of the premium that's on the exchange. Nonetheless, we saw generally a correction before the 50-day moving average, before we made contact with the 50-day moving average. And depends on what support line you have. I usually have my resistance line. I usually had it as this. And that is where we did see the breakout. But again, I think that traders generally use across the board a variety of different lines of resistance and support. And we can see here that price is coming down nice and comfortably here on this line. You can take a look to the hourly. and see that not only was this generally a point of contestant and resistance, but after that we had a breakout above there, and it's a matter of maintaining support near this. So I'd like to see Bitcoin hold around 3,750. If it can't hold roughly around this line and breaks through, you're probably going to get a retest of the lows. And now with Bitcoin being this low, breaking from 3,700 to 3,000, I mean, that's a $700 decline in Bitcoin's price potentially, or going down to the range where we saw before of 3,200. Still, if it goes down to 3,200 from 700, that's going to be a $500 decline. So something to keep in mind there if you guys are actively trading in crypto markets or looking to make additions. Maybe you might want to push it off, but I think that there's a very good chance we could hold here, that we hold along this line. Again, maybe even finding support around this range that we held back in late November, and then potentially start to come up and test that 50-day as we historically do. Again, I'll reiterate it one more time. I don't know if I'll be able to bring it up here on Coinbase. I think I will. Yeah, no, actually I won't be able to. Sorry, I'm gonna have to bring this up on Bitstamp. Coinbase wasn't really happening at that time. It was still being in development. But as you can see here, again, we tend to have retracements not only to the 50-day, but also 100 days. Moving averages in this case, could be 30%, 50%, and in some cases 100% bounce up to the upside. But in this case, the 50-day is getting very close momentum to price, and we're now down around 4,500. I think by the time we test it, it's going to be around 4,300, so a little bit higher than the range we tested beforehand, possibly up to this range where we hit resistance, and then possibly we could test up to the 100-day. But again, that's going to be if we have the right technical support, we get continued volume coming in, which I'm not 100% certain on just yet. So I'm not going to be making any calls or any signs of confidence. I do think we're going to test the 50-day, but that's not saying much with how fast it's coming down and the fact that this is going to take a few days to start to pull price back up. It doesn't just bounce right back up, well, unless we get a lot of volume. But anyways, in regards to altcoins, guys, again, I know I haven't been doing as many TA segments. Want to just kind of comment on that. I apologize for those of you who like me doing my TA segments. I do like to keep things simple, but outside of really a trade that I saw on Bitcoin Cash SV or Satoshi's Vision, again, I don't really like the project. That was one of our calls in the newsletter. They were very short-term trades. This is just not a market to be taking excessive risk. Now, again, if you guys are heavily invested in altcoins, again, I can't recommend you guys doing stuff in this case, but I definitely would say this is not the period to panic sell. But again, you've got to determine for yourself what you want to do. I'm just saying that I don't think this is a time where I'm really trading because there's not enough liquidity to really make some serious moves. So again, you guys can do what you want. That's just kind of my overview on it. More than anything, though, let's go ahead and talk about some of the key news here. I want to spend some time to talk about Bakkt because I think this is going to disappoint some people if they just look at the headline in regards to a platform that a lot of people have looked forward to. If there's anything that's institutional that people are excited about, it has to be Bakkt. People have been screaming at the top of their lungs. They don't care about a Bitcoin ETF. They don't care about Bitcoin futures. They think that the Bitcoin futures have held back Bitcoin, and I'm not even here to really talk about that. I want to spend some time to bring a little bit of calmness to a lot of the fear and the FUD around this about Bakkt getting postponed again. Guys, I have no doubt that there could very well be a pushback of Bakkt going into February or March. If, in this bear market, this provides a lot of time for these companies to spend a little bit of extra time getting things right, making sure that they have a successful launch. But in regards to this headline, it has to do more with the regulatory approval, which I can tell you that I don't think they'll struggle with one bit. This is Bakkt, which is being founded by ICE. ICE is one of the largest, bear in mind, one of the largest operators of exchanges in the world. And they've been doing things very professionally, I think, from what I can tell. But anyways, I'll go ahead and go through the details here. Here in the article, it states the company last set January 24th as the launch date. However, ICE has yet to receive the necessary approval from the U.S. Commodities Futures and Trading Commission, the CFTC, as you guys have probably heard. And at the pace the agency has been moving, it is unlikely that the approvals will be secured in a time that hits the target. Now, I don't think the organization has been moving at a slow pace. I think Bakkt has been moving quite quick. I think they want to get early market share into the space, but it takes a very long time to get regulatory approval to get committees to actually vote on these things, to actually get people to approve moving forward on things. And also, as well, I want to point out here, it says to be clear, that does not mean the CFTC won't ultimately approve the plan. A person familiar with the agency's inner workings said that even a January 30 launch was still plausible, meaning the delay could just be a matter of days. So this is really just a matter of waiting for the committee, or the CFTC in this case, to actually, I keep on saying committee, sorry, the commission, to actually go ahead and giving the full stamp of approval here. So it's regulatory concerns. They've pretty much spent this extra time from the previous delay to actually build out the platform. It sounds like they're pretty much ready to launch, but it's a matter of getting the regulatory approval, guys. It's usually what holds things back. But there's some understanding to it, I guess. This is a new emerging market. What I liked about this, if you kind of go through and read the article, there's some key points to take away, but this is really what I took away. That already would push any final vote past BAC's January 24th launch target, even though without taking into account the time needed to reach the public comments. The possibility of a U.S. government shutdown threatens to further delay the process. So this is something that would actually concern me, is that if a government shutdown, which we'll actually talk a little bit about later on in the article here, just kind of making sense of it all, as I stated, if a government shutdown persists, this might push back the approval stage, because the vote that they have to get in, from what I interpreted in the article, was here on the 26th, right before the day after Christmas in this case. If they don't, it's gonna be a little while if we have a government shutdown in this case. So they're gonna need to do this within a pretty short framework if they're going to get it done. So I think BACT will try to push as hard as they can, but again, regulators would have to meet in this case. I think they stated they'd have to meet on a holiday in this case to actually go through the vote. So again, it's just simply regulatory approval, guys. BACT is not worried about not launching successfully. I think they've got the proper technology, the proper custodial solutions. Everything's operating probably fine, but it's just a matter of, hey, we might have to wait an extra few weeks at max, going into maybe possibly February. Not a big deal in my book. Again, this bear market gives plenty of time for these things to launch properly, and I'd much rather them have the proper regulatory approval and the proper framework to do that. So again, nothing to worry about in that case. It's not like it's getting canceled. Going on, I want to talk a little bit about Bitfinex. So Bitfinex, as you all know, has still remained as one of the most impactful exchanges. I've met people from Bitfinex before as I've traveled abroad. And in this case, there's been a recent announcement that they've launched margin trading for the stablecoin Tether. Now, the fact that they have pretty much implemented Tether in margin trading here is not really concerning to me. So basically what they're saying is, in this case, Bitfinex has launched a margin trading pair for the USD Tether USD pair, which would perpetually lead to more efficient price discovery and enable users to hedge their exposure taken on stablecoins. Along with the dedicated lending market, USD Tether will be available as collateral for margin positions, the post further reads. So, again, being able to use USD Tether, in the sense on lending out to people to use for margin trading. The thing is about this that really concerns me, if I'm reading it correctly, is that I was a little bit concerned in the article. They mentioned somewhere about basically being able to use USD Tether as your collateral in this case. Now, if you guys probably know, collateral is basically what you put up in regards to if you're, for example, trading on margin in this case. In the case of a home mortgage, it would be your home. Like you're taking a mortgage out on a house. Well, the house is collateral. It's the asset. And if you don't pay into it, the bank will seize the asset in that case. If you're not good on the mortgage that you're paying into. But in the case of margin trading, collateral basically serves as the funds that you have in reserves. If you want to trade on margin, if I'm trading, say, on 20 times margin, I'm going to need to have a fixed amount of reserves where basically that if I lose, for example, 5% on my 20 times margin trade, I'm borrowing 20 times the capital, I'm trading with 20 times the risk, or the 20 times the potential reward. If I lose 5%, I've now lost the equivalent of 100% of my core position of what I have in funds, meaning I'm going to get liquidated, just like how a bank would seize the house, or, in that case, in regards to a mortgage, I wouldn't own the property anymore. In this case, what they're saying is that you can use Tether as your collateral. And this concerns me a little bit because I think, as we all have been talking about for a while, there's been good questions as to whether or not Tether is actually backed. And these Tethers being printed, if they're actually, if Bitfinex is almost becoming its own bank in a sense and just printing these Tether into existence. It's kind of like normal banks do. But anyways, and in all seriousness, though, this does provide some decent concern if they can use that as a collateral, and if they can just, if you start to see a large amount of printing of Tether, that might be a cause for concern. So I'd make sure to keep an eye on watching that. Because if it means that they could just print Tether and use that as collateral, they could literally just have a risk-free machine. If they lose, oh, no big deal. If they win big on margin trades, then they make a lot of money. So, I mean, there's already a lot of centralization in regards to the trading of Bitcoin. I think we've already seen the BART charts over the past few years and the manipulation that can occur in a low-volume market. But margin trading takes that leapfrog. It helps leapfrog it much further in that case. So, anyways, want to go through here for just a few key headlines, guys. As you all probably know, the project Zencash has been rebranded into Horizon, and they just launched their new beta wallet Sphere. It looks really, really nice. I'll go ahead and play the video here if you guys just want to look into it. I love anything that's actually working towards any project that's looking towards building nice wallets. And along with that as well, adding nice functionality. In regards to Zen, they added encrypted messaging. Huge plus for me in regards to something like Zen, which is supposed to be, or Horizon in this case, which is meant to be a privacy based network in this case. So definitely recommend you guys check it out if you guys have been keeping up with the project for a while. Seems like one of the ones that are actually kind of fundamental. Didn't do an ICO. It's just been from the ground up, and I've met a lot of people from the Horizon community as I've traveled across the world and stuff. Really interesting project, so I recommend you guys check that out. Another wallet as well is a project that I covered way back, I think, back when I started my channel in July or August. Pillar finally launching the wallet. I actually got to test it out back in July of this year when I was in Lithuania for their conference that they hosted. It was a really cool little small conference that had a lot of genuine people, even in the bear market, interested in what was going on in crypto. And they finally launched the Pillar wallet, and it's now available on iOS and Android. I'm very excited to see what they're able to do with it. I think Pillar's come a long way. It's not easy to build these wallets, but at the same time, it seems like they've added some nice functionality as well. So recommend you guys check into that. There's an article here talking about it, but they've got a tweet about it as well. You guys can go look into it. And along with that as well, Energy, one of our recent sponsors on the channel, has also gotten listed on DigiFinex. Now, I don't know too much about DigiFinex as an exchange. It's been one of the new ones that's popped up that has a lot of volume. Interested to see if they actually have got a lot of organic trading on it. I just don't know too many people trading on it. Nonetheless, good to see that Energy is getting listed on some bigger exchanges. Definitely seems like an interesting project. I like the fact that they're not an ICO. There's no pre-mine, and they're really big about getting people on board into the community. I think that's what every crypto project should do, but sadly many don't. So also, one thing as well, I just thought I'd recommend it to you guys. Last thing I'm going to show in this case is really the podcast that I did with Chris Catcher. I really recommend you guys look into this. I know a lot of people have been curious about the recent rebound in crypto and getting some perspective as to really what's going on and what to make of it. I think Chris, being someone in the space who's not only been in the space for a long time, but is a very well-established trader, has worked under William O'Neill, who's one of the most successful traders in the world. He has a great perspective on understanding these market cycles and understanding where we are. And he currently believes we've still got a little bit of a ways to go. We haven't reached the point of capitulation, but I recommend you listen to the podcast, a good hour and a half. Definitely check it out if you get the chance. Alrighty, so let's go ahead and talk about this recent shutdown. It is a war in the United States in our world of politics. It's really a lot of political theater. But anyways, let's go ahead and talk about this government shutdown. I've had a lot of people curious about this and what it means not only for the United States in general, but also what it means for financial markets. And I know, just like everything in the political scene in the United States, it's very controversial. But I think you guys are going to really appreciate my viewpoint on this, because I'm always usually very middle ground and I kind of try to cut out the noise. So basically, on the surface, what it looks like is really two parties, in this case, Trump and Republicans, really defending the concept of saying, look, in the next spending bill, we need $5 billion to begin development of the wall, which is going to be built amongst the U.S. and Mexican border. This has been something that's been a campaign promise of his for a while. And there's also Democrats who are saying, look, we are here to talk about immigration policy, but we do not support the wall. And basically, this is leading to a dispute where Trump has basically said, if we don't reach this is a campaign promise. There's supposedly support in regards to the country for this. We are going to shut down the government, right? And it's led to this bickering of who's to blame and, yada, yada, whatever. It's political theater. They've had the huge debates going on between one another. And, I wanted to say a few points here. No matter really about the topic of the wall, I'm someone who believes, maybe it could have an effective range of about 20 to 40% of curbing illegal immigration in that case. There has been some studies done on it before, which would be a great first step. It might actually help to pay for itself in that case. But I have to just speak on the fact that, I really don't see any resolution coming to this, guys, because for the past decade or probably 2 decades, there's not been comprehensive immigration reform in the United States, to my knowledge. And it's been an issue that has, again, been ruined by the lackluster performance of Congress and the general government, both the Congress in regards to the House and the Senate, but along with that in previous presidential administrations. I just don't really see much getting done. I think this is more of, again, political theater. And more than anything, I always get curious about the fact that usually when stuff like this happens, something bigger is happening behind the scenes. Something else is going to get passed in the spending bill that the media isn't going to talk about. Or there's something going on that they're, again, just generally trying to distract us from. This happens a lot in politics and in the media in this case. But I wanted to share really my unique approach to this, and I wanted to see what you guys actually thought about this, because it is definitely going to sound like a radical position, but it's something that neither Republicans or Democrats are really talking about. And I'm someone who always gets to the source of things. You notice how I don't really get emotional about topics like this. You don't hear me screaming or anything like that. I always try to really think through these common issues in a rational, logical way. And, when we talk about this topic of illegal immigration into the United States, as well as migration across the world, a lot of people don't really focus, they focus on kind of the surface level topic. They don't really get to why it's happening, right? Why are we seeing people illegally crossing the border in the United States? And it turns out that, well, it's not really rocket science. I've had many people, for example, in the United States I've gotten to meet who came here illegally, and they all tell the same story. The cartels. It has to do with the cartels. And the one thing that I always come to is that, okay, well, how would you kill off the cartels if you really wanted to get to the root cause of why people feel the need to leave their home country? Well, you simply end the income source of the cartels. You end what gives them power. And this is probably my very radical libertarian self saying this, but I've always believed that you could simply end the war on drugs, right? When you think about it, if you were to, say, legalize cannabis or something, which is becoming much more common or much more supported in the United States, and then you were to decriminalize other drugs, meaning that you wouldn't go to jail for consuming these drugs, you would actually be treated in the sense of, for example, if you were addicted to certain drugs or consuming them on a common basis, you would go through rehabilitation. We'd actually get to the source of why people are consuming drugs. Again, keeping that cycle of focusing on why are people doing the things they do. I've always believed in this approach. It's the same, for example, as I believe you can't ban guns, you can't ban drugs. It's about getting to the root cause of why people are doing the things they do. And if you can actually strip that income source from the cartels, you'd actually curb a lot. I'd probably say 80% of the reason why people will cross from Mexico to the United States. And you wouldn't need to put up a big wall, and you wouldn't have to wait for, I would say, lackluster performance from both Democrats and Republicans to come to some kind of comprehensive, conclusion. But anyways, that's my approach. Again, guys, I'm always trying to think outside the box here. I'd love to hear what you guys think down below. And again, have some rational discussion, guys. I like to bring up topics like this from time to time. I know people tend to get very isolated talking about these things, but I like to kind of follow the money and think about, what are they not talking about, right? I tend to think that the government doesn't have the better interest in our, the people's mind in this case, and it's usually just bickering, and there's something really behind the scenes that's going on, in regards to what they're voting for, or what they're really fighting for. So, anyways, just my little comprehension around this. Again, the shutdown will persist probably for a few weeks here, if nothing comes as resolution. But I think as the lack of function of government services persists, it's not going to last for months or for a very long time. It's going to be a buzz topic for a while. The media will go crazy about it, and then eventually one side will cave in, and they'll come to some resolution. All right. So speaking on this topic, as we were talking about the shutdown plays into a role of a lot of different things that have been spiking the VIX recently, or the volatility index for the S&P 500. We have been seeing a lot of spikes in the VIX over the past few months and higher levels of support for the VIX. And this really goes into playing with the uncertainty in markets right now, global markets. You've got, obviously, the Fed. I think this is the biggest one. The media kind of downplays it, but it's so true. The Fed raising interest rates, continuous curve on its balance sheet to the downside, real quantitative tightening rather than easing. You've got the trade war going on. You've got, again, the government shutdown, as we mentioned. You've got the issues in Europe going on right now and brewing in between not only some of the financial sector with Danske Bank and the money laundering scandal in Deutsche Bank, but you've also got, the riots in regards to France, the disdain in a lot of different parts of the EU, and the sovereignty of, a lot of the pigs countries, for example, like Italy, with the amount of money that they've borrowed and the situation that they're in with the ECB. There's a lot of things across the world, not even to mention, China with the housing bubble and the housing bubble across the world. We've got lots of things we're worrying about now, and we're worrying whether or not one of these is going to really pop the overall bubble, right? The everything bubble, as I think Mike Maloney quoted it. And it's very true. Well, we've seen a 157% surge in the VIX this year from open to close. And I think this is really important to notice, guys. Again, I've probably reiterated it. I think I talked about it on the daily update yesterday. We broke through this channel that I was talking about. I said, get ready. If we do, this is going to be a bloody next few days and weeks. And it has been. But not only just speaking to that, again, the higher base we've seen in the VIX. I mean, we were seeing warning signs about this for a long time. This is why I've been worried about it since 2018. Once we had this initial spike here and we started to see that a base was being formed higher than the record low volatility in 2017, the comfortable market that we were in, it's just gone, folks. We've sold off a lot of those gains. And that's why you want to lock in profits when when things get too good to be true, right? I think that's the good thing to put out. And that's, again, why I was saying in 2018, I was like, look, the market, literally the only thing buying up equities are stock buybacks. And people, maybe a few hedge funds speculating, but really outside of that, those who maybe want to get the extra dividends that are being paid out, and then they're getting out once they've got their dividends. They're not reinvesting it into stocks, right? We can see this even in predominant stocks like Apple, which have crazy stock buyback programs, $100 billion committed over the next 2 to 3 years. And this is still happening. Like record volume coming in here, selling off, almost dropping 4% after an already crazy sell-off. I mean, again, I'll put it on the monthly chart here to really put some perspective. Does that look good to you? It looks like possibly, in the next few months, if this keeps pulling back, I'd be willing to buy at a discount. But I still think this has got a few tens of dollars, I'd probably say $20 or $30 to go down before I'd even consider finding value. I want to see a 50% correction here. We're not that far away. I want to see this come down into the lower $100 range down here. And if you can get that, might be a good time, to potentially look at some value plays. I don't think this is going to be 2008, guys, as I mentioned, but it's important to know that corrections like this need to happen. And I'm not talking, the 20 to 30% pullbacks we've had in Apple and a lot of these tech plays before. I'm talking 50 to 60% correction. That's what's needed, especially in plays like Amazon, Google, Netflix, Facebook. It's needed. People got too comfortable for a very long time. And a lot of these tech companies are reaching, kind of peak market share, peak growth. So it's actually coming with a little bit of fundamentals as well. But I wanted to spend some time just talking about the broader market here because I want you all to be prepared for Monday. If you guys are invested in equities, if you're watching equity markets, there is some opportunity, but there's also something with that opportunity that you need to be worried about. If you are in equities, all I'm going to say is, again, I have no idea what it's going to turn out to be. We're not going to know until futures are trading on Sunday. But I'm going to say look down below. We have already broken this descending line of support. That is not good. Even if it was just holding on the descending line of support, that would be worrying because it's descending price. But we broke below that. And I want you to take a good look at the volume on the Qs here. People are panicking. And I've learned from personal experience back in 2015 and reading history that you tend to have flash crashes, the capitulation phase, where markets get excessively worried. And I think that we're about to see that. I think we've just seen a good chunk of it. I think we're going to see a capitulation down to some of these lower support ranges down here. And that is going to mean a bloody day for the NASDAQ. I'm guessing anywhere between a 5 or 6% drop. I really think we could see something like that. Now, going on here, this also means that there's opportunity potentially. A lot of people, for example, love trading, for example, these index plays or ETFs that are tied to the indexes, indices. That's my improper English for you. Talking about, for example, the NASDAQ or the Russell. or even some of these riskier ETFs, for example, like on biotech, and you can also trade some on leverage. I'm definitely going to be keeping my eye on a rebound play. I'm not going to catch a falling knife, but I will wait until we get the solid signal that markets are ready for a rebound and ready for a little bit of a correlation to the upside. And yeah, I'll be keeping ready for that. So I think I'm going to be keeping an eye, for example, there's the Russell 2000, again, RUT breaking near that line of support that I'm looking for, which used to be resistance. I think the Russell is going to start gaining some traction around this range, or possibly around some of the support levels back here. So I'm keeping an eye on that. It's moved much faster than I thought, but there's a lot of ETFs that you can look to. Again, I'm not going to recommend anything excessive like the triple leverage. Sometimes I'll trade that, but really in the short term, and I have to be sure that there's a reversal pattern formulating. But again, there's a lot of ETFs you can look up in regards to double leverage in this case, if you want to play a little bit more in that case, if you don't have a lot of capital. Again, it's your choice. I'm not going to recommend you guys any equities to trade. That's all up to you. But I mean, folks, this is just not pretty. This is really not pretty to have a continuous sell-off like this. Take a look. I'll go ahead and get rid of the drawings here. Take a look at the monthly here. Yikes. Now, again, you have to apply a logarithmic chart, I guess, to kind of get a better picture here, but that's not looking good. Break below the 50-month. We better hope that this week we get a rally above that 50-month, like we did back here in 2015. If we don't, it's going to be a bloody week. It's going to be a bloody week in a bloody 2019. What's nice is that we have seen some of the correction. So I don't think 2019 is going to be like 2008, but it's going to be a slow grind, and it's going to hurt. People are going to be hopeful every time there's going to be a little bit of a rebound, and they're going to think, oh, this is the time when equity markets go back up. We just had another, well, it's not a 5 or 10% correction. We're having a 30 or 40% correction, but this time it's all right. We're going to go back up, and then it's going to turn back over, and then we're going to get another rebound. It's going to turn back over. I think, again, we have yet to see real capitulation. I think we're just getting started, guys. And if you guys want, I posted on Twitter a post in regards to some 4 charts that I'm watching. If you guys watch the daily updates on a common basis, you've probably seen them. But I think they're the 4 charts you need to be watching. The 50-month moving average on the VIX. The way you do that is you remove the price, and then you get the 50 moving average, and you go to the month, so you get that chart. Watch the financials, the XLF, the S&P 500 financials. Watch the home builders. Watch the NASDAQ. Those are really the things you need to watch, guys. They'll give you all the signals you need on when a rebound is coming and when to start finding potential value in the market. We are not there yet, in my opinion. I think we've got a ways to go. I think you need to at least see, the Russell around here. Sorry, I'd say more around 1,000. I thought I was reading that as 1,000. I'd say you probably need to see a retest of these lows here. Maybe even somewhere in between previous resistance, previous support, maybe down to the 200-month. A little bit less than a 50% correction, but could very well happen if this pace continues like this and we've got 2019 to sell off into. I think it could very well happen, maybe even to 2020. Who knows? We just don't know with what the Fed is going to do. That is going to determine everything. We are not going to get many optimistic signs until the next Fed meeting. That is really the the next time we are going to possibly have any signs of positive news. Maybe you get a change in the trade war. Maybe the government shutdown comes with a great resolution. Maybe, China's bubble keeps going as well as the rest of the real estate bubble. Who knows? And maybe the issues in the EU get resolved. We'll have to see. But it is trying times, folks. It is time to sit back patiently, watch the fire, watch everything burn, and then wait to strike for potential value. Okay? So anyways, that's it for the video, everyone. Thank you all so much for watching. I've rambled on plenty today, so I'm going to let you guys have the rest of your weekend. You guys have done well. You've listened in, you've done your homework, and you've listened to me ramble on my lecture. But if you guys have anything you want to add, definitely leave it down in the comments down below. Again, don't shy away from controversy or making your points heard, but make sure to back it up with good evidence and explain why you think the way you do. That's what I like to try and do here on the channel. I hope I've done a good job and I've shared something with you guys today. But anyways, as I stated, I hope you have a wonderful rest of your weekend, guys. But until the next video, I'll see you all in the next one. Stay tuned.